instead of starting with a question, there's, I think, as we have 3 VCs in front of the audience. First one who stands, pitch. Are you kidding me?
Yeah, we have a candidate.
Okay, yeah, okay. What's your name? And keep it within 1 minute.
Okay, my name is Alexander. It's way too early to pitch, but I thought
It's never too early.
So it's just an idea. The idea is to make people trust each other faster by using sort of templated smart contracts, so people can interact easily and trust each other faster, so they can start focusing on creating value instead of talking about money. That's the idea. And now I need to build a company around it and make sure that you invest.
Right.
So I was actually thinking of just asking advice for this first phase. Maybe the pitch is enough.
Well, who wants to chip in?
Well, firstly, I think it's a good idea, and you could definitely build something around it. You should look at Agrello. Just let me leave you with that.
Right.
I'm not saying that they do it perfectly, but they are doing much of it. Agrello. Yeah.
That was it.
Yeah. Okay. Yeah. Any other comments or?
Well, no, I agree, because when you're talking about blockchain, we're talking about the trust gap, right? And so you're standing right in the middle of it with your thought and what you're trying to create. So, yeah, very interesting.
Cool. Okay. So first question to you. Yeah, Cashbox. So first question for me would be, and for Aron it's easy, but how do you view ICOs? What is the role of a venture capital in participating in an ICO?
Okay, so did you want to take that? Or?
Go ahead, Ray.
Okay, so we invest from the beginning to the very end. We help manage and structure everything from venture debt to mezzanine to early stage to et cetera. For us, this is another financing product that has a place and can optimize the resource capabilities for a company. So that's how we view it. We have at least one company that we're lining up for an ICO to leverage that as a means to again position it so that it can succeed in the economy and the ecosystem. So it's a great additional product. The other thing though is, like I said, we're in the wild west of it now. I would caution people from stepping into it, but I think in the future there'll be less and higher quality ICOs. And that should be the trend moving forward.
Yeah, I think as time progresses, you will see standardization on that field as well. I totally agree with Ray. I see it as a financing instrument. I don't look at blockchain companies any other than I would other companies in deep tech. But I do also think that it could be a value creation component, like explained by for instance, we.
But would you also participate as a fund? Like some US firms do?
It depends. I won't rule it out, but it depends.
On what?
Well, we normally fund for 18 months. That's the funding horizon. So then you get into the question, okay, how are we going to exit? How are we going to create value out of that? And that depends. So it depends really on the business model.
Okay. So how's that for you, Aron?
Yeah, well,
you obviously participate in it.
yeah, we obviously participate in it, and we see continued value. I mean, for us as a business providing value in the token design and token creation process. Okay, that's one thing. That's basically before the thing exists, right? It's creating the thing and going up to the token generation event and selling, but. With, for example, something like IOTA, the token already exists and it's all about helping token adoption with a corporate network or improving on it or leading research. There's much more that you can add later on as well. And the good thing is with tokens is that basically anyone can do it, more experienced and more able to do that well, and to pick the winners, and also to pick the ones where we can that it fits our investment theses, like you said, and where we can add the most.
So if you invest in IOTA, and so usually a VC firm wants to exit on a certain amount of time.
Yeah.
So how would that work in that sense? Is the ICO maybe a way to make it less stressful to exit?
Well, it completely changes the lock-in because tokens are generally liquid.
Yeah, exactly.
So you can sell any amount of your holding at any given time, subject to any vesting agreements created, of course. Which, by the way, we are very much in favor of. We go for long-term partnerships, but once those vesting periods have kicked in and you have liquid tokens in hand, you can choose to sell them, or you can choose not to. So that gives a lot of flexibility.
With the ICO?
Sorry?
Are these transparent with the ICO? With the tokens that is your strategy for in say the tokens that you have, is that transparent?
Oh, our token holdings, whether they're public, not all of them, but with ICOs, yes.
Your strategy on it. Are you, for instance, the exit? Are you saying, okay, we're going to keep them at least for 4 years, or?
Yeah, not in. No, I'm saying not in so many words, not in detail. But
I'm just curious.
we are public about that. We're long term in them, and well, not in every single detail do we put up every contract that we have on our website. But yeah, we are as open about that as we can, because it's it once again touches the community versus startup dynamic. When you're investing into a community, you're also you have your responsibility sort of towards that community, and not just towards the founding team. So yeah, it requires more openness. Yeah.
Okay. Any questions? Here in the beginning.
Hello. Yeah, I kind of had 2 questions, if that's okay.
Pick your favorite.
Ooh. Well, I was going to ask about open source protocols and forks. So what is the VC, is there a general VC approach to open source protocols? Like if you funded Ripple and somebody forked it, or some other protocol, then how does the VC view that as a risk, as something positive for the ecosystem? Yeah.
I'm going to let you guys.
Well, we fund open source frameworks already outside of the blockchain ecosystem. Bad word. But yeah, I have no problem with it if the business case is right, if there's an enterprise edition on it, and if there's value to be created and to be added by us.
But say there's a hard fork and the total network value that you're betting on decides, let's just make the same thing but different.
Yeah, I think that's really difficult for us to see what's to predict forks as it is for anybody, I believe.
So it doesn't dissuade you from backing an open source protocol?
Not for me, no. Not for me.
How about you, Ray?
No, I mean, for me, my whole evaluation is it, are we helping to create value with the company? And as long as the company's creating value, we can find a means to be able to capture that value. Hopefully, that's part of what our evaluation is about and our participation is about. We went through the whole open source arena, or the beginning of it, in the early 2000s, right? And the derivatives of that are pretty much similar of what's happening now, except for it's going to be accelerated. It seems like all these cycles return, but they happen quicker. So in terms of the fork might create value. I mean, that's something we can't hold on to. We just have to adapt. That's our job. That's what we do every day. That's what startups do. I guarantee whatever plan you have, it's not going to go to plan. No company I've ever invested in, even our best ones that are unicorns, have never gone to plan. So,
yeah. So is that kind of saying you would have to ride the fork like everybody else, and maybe not back the original team if something changes, or?
That's all hypothetically.
Yeah. All right.
Good discussion over drinks.
Yeah.
Question over.
Good.
All right, so thank you. My name is Renke Hendricks. I'm studying at the University of Nicosia. I'm doing the Master of Science in Digital Currencies. But I'm also having a background in finance, and I'm actually wondering, question for Aron. You are having limited partners, right? And these limited partners, they're putting a lot of capital in your fund. So how do you explain your limited partners, your investments in ICOs? In other words, how do you value ICOs, and how do you explain it to your limited partners?
Yeah, well, as you would any other investment, really, it's risk reward, and with ICOs, okay, we have to do a bit more. We have to do a crash course on what this thing even is. But of course, they came to us for a reason. They know that we're in this business, so that's interesting to them. And then it's all about risk reward. So when with a startup, you're funding a team, and you hope that they'll make it, and with your help, you can improve that. And with an ICO, you're also funding a team and a community, and you expect a return according to different value metrics also.
Yeah, all right, because like in a normal company, you can do a discounted cash flow method. That's like the most classical. But how?
It's not how we value companies, but
No?
that's,
Yes,
that's
not at the early stage, you don't.
no.
Maybe you can shine a light on what kind of methods you use in valuing an ICO. Or
Yeah, well, any specific valuation models, I'm going to defer to my colleagues because I am actually CTO of the company. But in general, it's part of it is the discounted future value of the token model, as Alexander described, and what's his name, from Sweetbridge also, which is indeed a moving target. Currently, you're looking at, okay, we're creating this token, and there's this possible future use for this market, and if that happens, then the token would be valued at X, and that continues. But yeah, there's overlap, but it's definitely different from
If it's an open liquid market, I would say just take the daily rate. That's a value for our venture. For our ventures.
Yeah, but early on, when there's nothing yet.
Yeah, then it's difficult. Then you usually take the funding round.
So in this valuation discussion, it's quite obvious that there are different valuation methods in Europe than in United States, as it appears that sums being invested in startups in the United States are frequently larger, and based on, we don't know for sure what differences, but can you tell me? Can you tell us something about that, Ray? Because the way you look at valuation, when you talk to also a lot of investors in Europe, as you would say, they basically want you to have already taken away the risk and earn a good amount of money and stuff like that. The client, you have to have deals and stuff. So how do you evaluate a thing that can be forked, or you have to pivot not once but maybe 10 or 20 times?
Yeah, so again, not an exact science. We don't have the standard metrics that you can use. Anything that you can project from a straight financial standpoint. The one thing about finance people is you go to the street, they're iterative. They can't go from A to C, okay? You got to show them A to B to C. So when you start talking about doing discounted cash flows on, I think this could happen here or there, it's not going to work, and it's not going to work for us either. So part of what we're looking at from the valuation is, okay, so the ICO, what does it serve in terms of the overall vision of the company? Is it a platform that enables, a solution set that they're providing from a use case? Are they tokenizing a market that they own? Is it something that comes with a design that enables usage that will create value within a larger community or a group that would be drawn to it? again, how that can be leveraged and the value that's going to be creating in the marketplace. And so when you start looking at those things, then you start working kind of at the end backwards, and then also at where we are now. And we have the same investment horizon as Frank. So, you know, we're looking at 18 months. We want to make sure that our companies have the what they need to move forward for 18 months, because in 18 months we're going to finance them again, generally. So we want to make sure that they're able to hit milestones or create value that change who they are as a company. So all of those different pieces are being drawn into the puzzle. And again, you're talking about classic macroeconomics that is being completely turned on its head, right? Because we don't have any real asset value tied to these coins. So that's another variable of what the value of this is. So the value is, okay, digital scarcity. What the heck is that? You know? So yeah, if any of you figured out how to do all these valuations, come talk to me. But yeah, it's more art than science, and all these pieces are important. And the key metrics, though, are again, how are you using these coins? How does it change what you're able to do? How does it affect the marketplace, and what value are you creating?
Right. Cool. Okay. There's a question over there.
Right here. So my name is Mark, and I'm doing my graduation thesis on ICOs, or token sales. And I'm curious, because so far we've been talking about you investing in token sales, but do you also regard them as possibly being disruptive to your own business model as a VC?
Everything's disruptive to our business model. Telefonica has an AI that they're using to choose where to invest. The great thing is, though, if you look at and we were talking about this earlier, if you look at the alpha, which is the component of the CAPM model that determines the contribution of the fund managers to a leveled playing field on the different points in the finance chain, the highest alpha, which means the place where the managers can cause the most damage or create the most value, is at early stage VC. So luckily the three of us will be the last ones to go.
Standing strong lands one on the boat.
So, but I don't, so when you say disrupt, I'm not sure exactly how to take that, because again, for us, it's another piece of the puzzle. If we're good, we understand the value it brings, how it translates as a financial mechanism, then it should just enhance our capability. Because right now, the token market in general is kind of, you know, throwing darts at the board. And you can do that from a VC standpoint as well, investing in startups. But supposedly we have some expertise and value add that increases the probability of success and return on that investment. And so hopefully we'll be able to ride this wave as well.
Yeah, because as far as I know, you back a company, you put in quite a lot of money, and you also get on the board, you help the team. But with token sales, anyone from anywhere can back a company and spread the risk immensely, which is not the way as you do it with your business model.
And I don't mean to take over this conversation, but that's one thing that, okay, so a lot of people don't understand is that finance risk is one of many risks at the beginning of a company. So all you're talking about there is managing the risk of that capital. There's team risk, there's development risk, there's operations risk, there's strategic risk, there's market traction, there's partnership risk, there's competition risk. There's so much involved in there that it is not being cared about with that model. And so again, the chance of a company being successful only with the money, what it does is it's kind of a spray and pray model. And and hopefully what we do is more precise and value add than that.
Right. I have a question over
Sorry,
here.
guys, that one already.
Hi, my name is Jacco Heemstra from Start Loving IT, and I was intrigued by the question of Ray about the technical challenges of blockchain. If you have some technology that can solve some of the problems, what is then the business model behind that? Because it takes money to develop that technology further.
Yes. So again, since you asked me directly, yeah, absolutely. So but the thing is that the great thing about that is if you solved one of the problems that I was talking about from a technical perspective, is you now have comparables. I mean, when they first were coming out with this, it was, blank page. But now we have better understanding, and tomorrow we'll have even better understanding of what that value you're bringing to the table is actually enabling and can create. And then you can actually hopefully translate that back to one of us and say that means that the value of my idea and my business is this, and with your resources we can do this, and drive that forward. So again, where we are now is a great place to be, because somebody else has built the first stones that allow you to kind of stand higher and improve on what they've done. And they talk about a bubble, all the time in this space. And one of the things that always intrigues me is every time there's a bubble, generally there's something really important and disruptive underneath that. So if anybody's calling this a bubble, then that should put a smile on your face, because then that means this is important and you want to be digging in there and being a part of it, because it's exciting.
Thanks. Then we should have a conversation, I think.
Perfect.
I have something to add to that on what's the business model. As you rightly say, these things are how are you going to monetize them? They're improvements on something that already exists, right? And that's really, to get back to the fat protocols concept, the value is in the tokens. So what can you do? And as an example, take Ethereum and Consensus. Consensus is basically the corporate arm of Ethereum and the venture arm. What they have done is have a significant holding of Ether tokens, build an ecosystem around it, and see those Ether tokens go up in value. Why did they go up in value? Well, probably they contributed to that. So what's their business model? See Ether rise in value and sell it. I'm not saying that can't go on forever, but that's the same with VC. You can't keep investing forever. It says it grows to a certain size, but buying into a token, possibly at an early stage, and then contributing with such improvements as the faster zero knowledge proofs, better scalability, etc. Funding those as in order to increase the value of the holding that you already have makes sense for VC.
Okay. Questions on? Alex. I will carefully bring this.
Here it comes.
Yep.
I have a follow-up question to that answer. What specifically has Consensus contributed?
That is a good question. I'm gonna answer that offline, but
well, why is marketing, right?
Yeah, well, they made truffle, so everyone can make better Ethereum apps.
Okay.
But they also made other things, but that's one example.
Cool. So, all right, we have time for one more question over there.
Hi, I'm Niall from Cypher Group, and I have one question, because we are always talking about blockchain and great teams and millions, but how important is crypto knowledge? So knowledge of crypto communities, building a community, managing a community. How do you see that?
Use crypto knowledge, but community, or it's
crypto
more about community. The question, right?
Yeah, crypto community knowledge.
Okay.
Because it's very specific.
Right. Very important. Because I
Asking the
just want to
question,
understand what we're talking about here. No, it's very important because we're talking about tokens. Then the community is arguably all you have as when you create a token. It's people that contribute to it, that believe in it, that are your ambassadors, and attracting them and governing such communities is really important because it's full of scammers. It's full of like you have to guide the discussions in the right way to really make sure that it's a valuable community rather than just a couple of people with a Slack account to really get the value out of those online communities.
Okay, community
Thanks.
building, important. It's time, and I think time to move on to the drinks. But first, give a big hand of applause for the So I want to round up and get towards the drinks. So we started this off as a first time. We asked at the Next Level conference back in July at APG's Brightland campus in Heerlen if we should do a funding deep dive. So who thinks we should do it again next year? Yeah. Okay. Cool. Yeah. yeah. Okay. Cool. So I think I think it was very cool to look at kind of the same problems or challenges we're facing in this ecosystem, at least from a very varying point of views. So thank you to all the speakers contributing to that. Also, people coming from abroad to fly in to be here and to share their knowledge with us. So a big round of applause for everybody. Moving forward, I would like to point out that on the 6th of December, we have the technology deep dive. We have space for 600 people. It will be packed because I think never in the Netherlands we had so much technical knowledge on stage. And we also have a decentralized Q&A. So pick your favorite speaker and dive with them for 45 minutes into what you really want to know, whether it is Hyperledger, IOTA, Ethereum, or what have you, BigChainDB, the Ocean protocol. Looking forward to hear what that's all about. And I think also very important to know is that the registrations for the teams, they are open. So looking forward to receiving only full teams can apply. But I look forward to talking with all the team captains and seeing how they can fit the different tracks we have. So without further ado, I would like to get towards drinks. So there's a burning question.
When does the registration close for the teams?
Nobody knows. No, it closes. This is always an emergent process, kind of. So last year we had it opened on the 9th or so of January, and we closed it on the end of January, I think 30th, and we had over 650 applicants, and we had to pick 55 teams, which of course is not enough. So this year we have space for 64 teams. The first 4 per track will be selected before February. And these are the teams that already know on which track they want to work. As we have learned from yours, that we don't know exactly what are the up till the end. A team can also join, which can be have a remarkable accomplishments. So later on the process, we'll start vetting more teams until the tracks are fully booked. And of course we have the track deep dives in February to discover more on and to dive deeper in whatever you want to know on blockchain and whatever kind of topic like energy transition or healthcare or stuff like that. So also visit visit the deep dives, also to get in touch with the track sponsors and to talk with them on the challenges they face and the possible use cases that can help move that forward. Also, I must not forget, are there any people from Mensis in the room? Because Monique is from the University Medical Center of Groningen, but I think they're already gone. Okay, they were here. So I think that's also most of the track sponsors are already here. So meet them at drinks. Okay. Yes. See you next time.